and we'll get going. Good afternoon, everybody. I'm Verne Milot, and welcome to our newest program called Cheers and Chat. It's an opportunity for us to learn in an informal way with perhaps a cocktail in hand or and a little bit of networking. So effectively, we're trying to create a virtual form of business after five. Have a nice casual chat with people, nothing too formal, and more of an ad lib session in that sense. So we're looking forward to that and see how it goes. And please comment, critique it, tell us what you'd like. In the future, we're looking at having breakout rooms if we get more people. The other thing we can do is have a parking lot discussion. In other words, after it's over, those that want to hang around on screen, we can just have an open mic and chat away about stuff that way too. So that's the intent of it all. Hope everybody's okay with that. We'd like to certainly thank our sponsors, Desjardins. Always been a great supporter of our businesses across South Niagara, and as usual, they came up and are helping to sponsor this new series. Also like to thank our tech sponsor, B4 Networks, Niagara's largest IT support company, and Brian LaChapelle is on with us, and his team have done an amazing job for a large number of these webinars over the last year. So certainly thank you very, very much to B4 Networks for that. The topic for today is COVID-19 resources that you're entitled to. And what are the tax implications that are tapped into these benefits? In briefly speaking with Jeff about this yesterday, I'm astounded at what is available and how many people I'm sure both Jeff and Kelly come across that have not taken advantage of serious money that they could be taking advantage of. And a lot of these great programs are actually finishing on March 31st. So we're going to get into a little bit of that. And if it doesn't help any of you, certainly you're going to know somebody who should know about it. Jeff's got anecdotal stories of people can't believing how easy it was to get $60,000 and things like that. So we'll get into more of that in a minute. Anyways, we have our two experts here with us today, and we thank them for their time and for helping out. The first is Kelly Maidens, who's with Desjardins as a financial planner. He's a CFP, a certified financial planner. Was that right, Kelly? In terms of that acronym, and yes. he's an honors bachelor in business administration. He's been a CFP since 2004, and he's been with Desjardins for 15 years. He also does work with the Financial Planning Standards Council as a professional ambassador and a bunch of other roles that he's had with the council, not the least of which is a case writer for their certification exams. So, that alone tells you that we're dealing with somebody that knows his business and understands financial planning. Certainly, his skills include wealth management, financial planning, and retirement planning. So we have the brain power of Kelly offering himself for the next hour. Jeff Neill. It doesn't say it here, but Jeff's grandfather ran a TV and electronics shop and repair shop in Welland many years ago. It might have been called Neill TV, was it, or something like that?
I think it was Jeff? Delta Neill.
Delta Neill, that's right. Yeah, that's right. And so that's kind of cool. So longstanding family in Welland, and Jeff has an honors bachelor in accounting, and he wrote and passed his CA exam in 2004. I think in the first time he wrote it, so that's pretty good. He's a partner with Durwood Jones Barkwell, and he's been with DJB for 21 years. Doesn't look it, but he started at the age of 9, so that's pretty good. He's a general practice accountant, experience in business, financial, tax consulting services, audit and assurance services, and he's vice president of the Welland office. So again, we're lucky to have both these guys with us today. So let's pick their brains. Quickly, we're going to do a roundtable of everybody who's on. So we have 4 guests that have joined us. Not many, but I'm quite happy with that because we're going to be able to satisfy our needs a lot better than if we had 50. And this is our first time, so nobody knew what it's about. So normally these things take a little while to get momentum, but once they do, we get a lot more people show up. So please, we'll go around and introduce yourself and tell us what you do and what you'd like to get out of this topic today, just so that we could steer some of the discussion to make sure we hit that. So Raul, why don't we start with you? Would that be okay?
Sure, yeah, absolutely. You hear me, yeah?
Yeah, really well, thank you.
Okay, good. I'm a TV producer. I have my own show on Omni Television since 2002 in Romanian language. So I'm producing right now, filming and editing because of this situation. And I also do corporate videos. And the most recent, I would say, mini project is called NAGRA Supporting NAGRA. We have a Facebook page where we post short videos of local businesses from Niagara, and we encourage people, Nigerians, to shop locally. We even have a message from the mayor, from Jim Diodati, who offered his support for this mini project. So yeah, basically that's what I do. And on the side, I'm also a musician because I saw Sharon has there many guitars. I also have about 6 or 7 guitars. So but that's on hold right now. So maybe I will talk to Sharon afterwards about that.
That's
Thank you.
awesome. That's awesome. Thank you very much. Sharona,
Yes.
please
Oh,
introduce
Sharona, sorry, not Sharon, Sharona, sorry.
My turn to talk about my business.
Yeah, who you are and your
Okay.
business and what you'd like to get out of today.
I'm just a brand new business owner, first time. My startup is landscape design, consultation, installation, and garden coaching. So pretty new niche in the horticultural industries. That is just what I'm starting at, and here to learn anything that I can because I'm very, very new to everything. That's all.
That's
Oh, and the
fantastic.
guitars belong to my husband. I don't play guitar.
That's fantastic. And yeah, we have to get in touch because I'm looking for some landscaping work on my property. So
Well, I'm excited about those.
I'm a prospect for you. Please call me.
Okay.
Dee Valencia, I'm sorry I don't know what your first name is because I just have the initial, but could you introduce yourself? You're on mute right now, so if you'd like to take that off, and if you want to take off your video mute as well, whatever. Oh, we have neither. The mute button will be in the bottom left corner, and there we go. I think we're getting there. No, the mute button's the bottom left corner, and it looks like a microphone. So if it's got a line through it, click it. No, no luck there. Okay. We'll move on to Janet Madume. Janet?
Hello, everybody. It's great to see everybody. Unfortunately, I can't put my video on, otherwise you'll lose me.
No problem.
But
We don't want to
it's
lose you.
That's why, you know what, I'll just stay behind the scene. That's fine. But great to see everybody. And I'm from, well, I represent Western Heritage Council and Multicultural Center, and also Employment Solution. I know it's one organization, everybody gets confused. We just rebranded the employment agency so that nobody perceives it as just immigration service agency. That's why the two names. What I want to gain from here, with the effects from COVID, I'm hoping Jeff or Kelly can give some perspectives as to how we can proceed, especially that we are a non-for-profit.
Good, great, interesting. Did you get that one, Jeff? Kelly?
Yeah,
great.
Wasn't really tuned up for not-for-profit stuff, but
that's okay. I figured I'd get you working hard here.
See what I can verify that I qualify for.
Last but certainly not least, Kevin Jacoby.
Folks, how are you doing today?
Not bad.
Good. I'm Kevin, Canada BW, and my little hobby company is 6 Word Studios. I'm here because I thought we were having ice cream, but that's okay. Yeah, I just came to participate and show support for them. I'm on the board for the chamber as well, and I need a fun, de-stressing thing to end my day. So this sounds like a great thing to do. So thank you all very much for being part of that de-stressing part.
Perfect. Perfect. And not needing any introduction, Dolores, would you like to do an introduction for those? I
Sure.
don't think anybody doesn't know you, but that's okay.
Well, I'm Dolores Fabiano. I'm the executive director of the South Niagara Chambers of Commerce. That includes Niagara Falls, Fort Erie, Welland, Pelham, and Port Colborne, Wainfleet. We've got about 2,000 members across the board, and feels so good to see different people. I mean, almost a year ago today, we had our last in-person BA5, Business After 5, and it's been a long time since I've seen Raul, for example, and Kelly, and Sharona and Janet, and it's great to hear your voice and great to see you. So thanks for joining us.
Yeah, it's great. Good. Let's move into our session. Kelly and Jeffrey, is there anything I missed in the introduction for you guys you want to add or anything like that? No, we're good. That was thorough, kind of thorough.
Sure. Nailed it.
Great. Lovely. Wonderful. Let's start. Let's break it on parcel into two parts. We can do corporate and we can do personal. And why don't we start with business owners and what there might be there. Certainly, there's a huge list of grants and loans and things we can get from COVID alone. And let them start with a letter C for COVID, but nonetheless, let's start with the Siba loan. Jeff, do you want to give us a bit of a introduction into the CEBA loan and who can apply for it and when is the deadline?
Sure. The Siba Loan is the Canada Emergency Business Account. It started out as a $40,000 line of credit, where if it's interest-free from the time you apply, and as long as you pay it back by December 2022, you get to keep $10,000. Subsequently, they've enhanced that and said the total borrowings is now $60,000, and you have to pay back 40 of it, so you get to keep 20. Generally, the qualification, there's two ways to qualify. One of them is based on wages. So if you have wages between $20,000 and $1.5 million, and you have an active business account, then you basically automatically qualify. Sharona, the biggest trouble for a lot of these programs are they don't qualify for a lot of new businesses. So it's all businesses that were established before COVID. They're changing the rules on these things all the time. And so even though what I tell you, it doesn't hurt to just Google the government's webpage and check it out and see if they changed any of the rules from the last time I read them on that one, because this one's nice. It's interest-free for basically 2 years, and then you only pay back a portion of it. NPOs do qualify for this one, Janet. There are special rules that I don't have off the top of my head, but it's definitely worth looking at. The very first line on the government webpage says hard-hit small businesses and not-for-profits could be eligible for this. So it's worth looking into, and it'll require the bylaws of the organization to allow debt to be taken on, which a lot of not-for-profits have a restriction against undertaking any debt. And while this doesn't seem like really debt, because you can just advance the full 60 and pay back 40 in a month and keep 20, technically you're signing a loan agreement. So the organization structure might not allow for it. If a business takes this money and they get to December 2022 and they can't pay it back, it turns into a term loan. So you no longer get to keep the 20,000 grant portion of it, but the whole 60,000 turns into a term loan that will bear interest, and it's repayable, I think, over 5 years, but I'm not 100% sure on that one. So for most businesses, they are taking this wherever they can, whether they need the money or not, because you get the grant portion. And for businesses who absolutely need the money and are going to struggle through this, then there's a term at the end of 2 years. You're not forced to pay it back immediately. I I said there was 2 ways to qualify. One of them was wages. The second one is, they call it non-deferrable expenses. So if somebody has contracts, if they have rent, if they have other expenses, but for whatever reason, they've been doing dividends or not salary, or they don't have a lot of employees, but they do have contracts where they have to purchase certain material, then they can support their application for this loan with their non-deferrable expenses. So those are the 2 ways. If you Google Siba, CEBA, and CRA, the webpage comes up. So Janet, I would definitely look into that one. But again, your bylaws might preclude you from taking on the debt.
And you might be able to change your bylaws, I suspect, for with various constraints, perhaps. I don't know.
Yeah, you could, depending on what they say for change of bylaws. The other issue with this one is the application period is set to end March 31st. So you'd have to move pretty quick to take advantage of that.
How many people have you seen utilize this, Jeff? Have 50% of the companies you deal with taken it on or not, or is it underutilized, overutilized? What do you think?
Like everybody, because there's no revenue drop criteria. There's no, like, anybody I see that had wages is a slam dunk. Go take this. It's the struggle are for the smaller businesses in the non-deferrable expenses. So somebody who's been remunerated with dividends only, he doesn't qualify for that method. Maybe it's a construction contractor type guy. Well, all his expenses are deferrable. He doesn't need to purchase those materials. He operates out of his house, a general contractor type of story, and they're not able to access it, which is unfortunate. But the program says that they've issued 842,000 of these loans.
Wow.
At this point in time. Not all my clients, unfortunately, but the taxation. So I guess the taxation of the grant portion of this. So if you take the loan, technically the CRA wants you to pay tax on that full grant portion upfront this year. There's an election you can file to defer that, because some businesses don't know truly if they will pay it back by the end of 2022. So you have to file an election. There's no specific form. You just have to write your own election and file.
So do I understand correctly that the grant portion becomes income in their next fiscal year?
Yes, that's correct.
Okay.
The grant portion is income. So any business with net income under 500,000, your tax rate would be 12.2% in Ontario. For businesses with income over 500,000, be 26.5%.
So hopefully you're having a very bad year and your profits are way down, and that'd be the right year to put it in then, right?
Absolutely. Without getting into a long-winded discussion of integration, paying tax at 26.5% isn't the end of the world.
That's true. But tax deferral is always nice, right?
Absolutely.
Name of the game. Kelly, is there anything you want to add to that? Have you seen perhaps even more wealth coming into business owners and them needing to call you up and say, Kelly, I've got an extra $40,000. Where can I put it? Or
it depends again on the industry that people are in. Certainly, we've been getting it from both sides. Certainly, we've had certain members who have been in tough situations, and the support and the mechanisms going through to help them. And yeah, with the wealth management team, there's been some great opportunities for real estate sales. So some of our members who are in real estate have divested some of that and are doing just fine. And yeah, need to see me because like Jeff and I were talking beforehand, they're looking at retirement and a corporation has tons and tons of money, and they want to know, again, going into retirement, how are we going to divest this from the corporation and what's the best way to do it? But, the multitude, and what Jeff said earlier about the multitude of programs that have been put out there and the way they've changed over the summer and into the winter, it's just, you really have to either have a friend like Jeff or really go to the website. And again, sometimes I'll go to the website, but the newest Google article is from a week ago from a trusted source, but it's old information. So it's, it's to have people like Jeff and going through these programs, or your business banker to help you through, because they've really evolved over time.
Yeah, interesting. A related question, slightly off topic, but Jeff, what is your industry like right now with tax season hitting, as well as perhaps all of this additional support service work that you have clients, coming to you for? Has it been an overwhelming amount of activity and work for your industry, or has it been reasonably good?
Well, and then throw in everybody working from home for the most part, and
Oh
it's
yeah, on top of
largely
that.
overwhelming. And with the deadlines coming up, the tough part is you want to make sure you can get people as much money as you can, right? So it's been stressful for all our people, but I think everybody's stressed in every industry.
Is the government going to wait till the last minute to have a tax deadline deferral again?
I don't think so. They haven't
Yeah.
deferred a deadline since the first one last March. So I think the US are lobbying the IRS to push the deadline, but I don't think we'll see one in Canada.
Wow, interesting. Good.
Did you see Janet's question, Vern?
I'm sorry?
Did you see Janet's question?
No, I'm sorry. Thank you, Janet. Let me get that up here on chat. I missed that, and let me ask it. Thanks for the insight, Jeff. Are we required to have collateral? Good question, Janet.
No, there's no collateral required on these loans. The government's backing all of them. The applications through the organization's regular financial institution. So if Desjardins is your bank, you go in your online banking with Desjardins, click. Generally, you have to upload your T4 summary, or at least that was the process in the beginning. I'm not sure what it is today. And then 5 minutes later, you're approved, give or take. So it's really slick. It's through your financial institution, and no collateral required.
No personal guarantees, any of that, and not have to mortgage my house and whatever else.
No, it like Jeff said, we had that up on our online business banking fairly quickly as soon as it was announced, and it was amazing. In the first week we had to do some by paper here in the office, and then all of a sudden it just went completely quiet because, like Jeff said, you went online, clicked a couple buttons, and it connected through and was all done electronically.
Wow, that's cool. Great. One other business topic we have down is, support grants for lockdown, in terms of PPE grant, property tax, energy rebates, all these types of things. Jeff, can you start us off on that one as far as what might be some great grants that relate to Ontario lockdown?
Yeah, so the Ontario government came out with this grant program when they announced the lockdown in December, and it affects certain industries, specifically the ones that were hardest hit. You've got retail, photography, automotive. Anybody who really got locked down, the government said, like, you can't operate at full capacity for the most part, can get into this grant. I've heard from clients, and this is one that we don't get involved in because it's through the Ontario government's website, but that the application program is really quick and the monies are getting out really quick. So if you qualify, you can get between $10,000 to $20,000 with the general Ontario lockdown support grant. If you just Google Ontario lockdown support, the webpage comes up and it lists everything that Ontario is willing to do. Again, this is a March 31st deadline for application, so it's worth looking into. And specific industries or gyms, and like you name the ones that were really shut down hard are the ones that it applies to the most. Then they tag on the PPE grant is, I think, up to $1,000 if you have between 2 and 20 employees or something like that to offset your PPE costs. There's a property tax and energy rebate, which they called the Main Street Business Help. So people with, I think that one required more of a reduction in revenue to apply for. But yeah, those are all through the Ontario government's website.
Nice. We have another question from Janet, so why don't we go to it? Janet, I can read them, but did you want to come on and ask it yourself, or would you prefer that I read it?
Oh, sure. I can definitely jump in. Sorry to have a segue to a different topic, but as a small organization, am I required to issue the declaration of conditions of employment to my employees? Because I have one who has been pestering me. It's my understanding, though, that everybody's still going to get the benefit of $400. Am I correct?
Yeah, we had this one on the list. So you hit the nail on the head with something we wanted to talk about. There's 4 people the question is related to the home office deduction. Employees who are forced to work at home, how can they benefit for it? So traditionally, anybody who's had to incur personal expenses for employment had this form, statement of employment conditions, filled out. That's the one Janet's asking about. And it's up to the employer to determine if this person was required to incur costs personally. So that could think working from home, use of personal vehicle, have to buy their own office supplies, pay for their cell phone, things like that. And that allows people to write off those costs on their personal tax return. For COVID, the government's come in and said, let's make it easy on people because everybody was at home. You can go that route where the employees get the form from the employer. There's a simplified form, T2202S, that you can use, or the final one is you can just deduct $2 per day that you were at home for as many number of days that you were at home, as long as it spanned 4 consecutive weeks at one point during the year, which basically most people did in March or April last year. People get really worked up about it. Like, oh, that's great. Maximum 200 days. So I get $400 I save, but it's a $400 tax credit that gives you savings at 20.05%. So the maximum an employee saves is $80. Nothing wrong with $80, but I think a lot of people see the $2 per day times 200 days and go, I'm getting $400 and they're not. So I don't believe you have an obligation, Janet, to issue them that form. I would just advise them to go this route. The other route, if they do fill out the form, if you give them the form, then the obligation is that they add up all their utility bills for the year and they prorate their office space. So if your office is 10 by 10, space in your house is 100 square feet and your house is 1,700 square feet, you get 100 over 1,700 times utility bills, times the number of months you were at home. So by the time you add all that in, it becomes a big hassle. And the dollar amount works out to be pretty similar, but I guess it could benefit some people going that route. There's other things. If you're working at a kitchen table, then you have to figure out the number of hours you work during the week, prorated over the total hours in the week. And basically for the $2 a day, the government said, we're not going to audit it. You put it on your tax return, we'll accept it, because ultimately it costs them $80. So for a lot of people, it's just going to be better. Just do that. Even if you would get $20 more the other way, the headache of filling it out and then the risk of the government wanting to verify the numbers. There is no harm to an organization giving the statement of employment conditions, and you can use the simplified version, Janet. So if you really want to keep the person happy, I know in our organization, we tell the employees, you fill out the form for yourself, indicate what you needed, and then our controller will verify whether that's accurate and sign it at that point in time. So we put the burden of administration on the employee, and obviously they have to be truthful with what they're doing, and then we just sign it at the end. And so that might be an option. You want to keep your employees happy at the end of the day. So if they really care about that route, then there's no harm.
Well, thank you so much.
Jeff, just to carry on a segue to that same question, we moved into personal taxes, but that's okay. What about people that think there's a great gain at this point in time because they're mandated to work from home to take a room out of their home and consider it to be an office and then want to proportionally expense all of the home's expenses? And the tax implications of that regarding capital gains on your principal residence and so on and so forth. Maybe you can kind of simplify that and enlighten people that may want to go that route or think there's an option there.
People love that route. That's a good question. We didn't even pre-prep that one, Verne. Not bad.
I think it's a great one. Who thought of that one?
I
Kelly,
apologize, guys. That was one I've had to live through when a house went up for sale, and a wonderful CPA remembered that the guy had been using a room in his house. Even though he had a storefront, he claimed he still worked out of an office from home, and it created havoc for him on his capital gains exemption on primary residence. So sorry, Jeff, it's my fault.
Basically, you can't claim
Thanks,
any
Kelly.
renovation to your house. If you build an office, somebody said, I'm going to be working from home for a while, I'm going to finish my basement and build an office. None of those construction costs count for anything as far as being able to write off on your personal tax return. The operating costs of your house can be prorated. If you had to buy a desk or a computer and your employer says those are required, then you could take those, but not anything to do with the actual construction costs of your house. You can't depreciate your house. As soon as you do that, you lose your principal residence exemption, as Kelly alluded to, which would make your house taxable when you sell it. Currently, it's not taxable. So yeah, if you're doing any construction to your house, you don't want to write it off or do anything with that. It's just operating costs.
Great. Raul, did you have a question that you wanted to ask? Oh, you're still on mute, Raul. Need to take your mute off.
Yeah,
There
I
you go.
got it now. Thank
Okay, it's perfect. Sorry.
Yeah, I have a question about the grant. We got like the independent TV producers got a federal grant last year. It's a one-time grant related to COVID, the fact that we lost a lot of advertisers. I just want to ask if, because it's a larger amount and definitely it will look like a big income when we do our taxes. Can this amount be, I don't know what's the term, deferred or parked or divided in 2 consecutive years? Because we know that 2021, it will still be a COVID year, but almost sure 90% that we won't get a grant like we did last year. Can we divide this into and declare half for 2020 and half for 2021? And it's a corporation that I'm talking about. Thank you.
I'm not 100% familiar with that one. If there's stipulations regarding how the money is used.
Sorry, that's just a mention that in the agreement with Canadian Media Fund, Telefilm, there's no time limit of spending this amount, and just mention that you have to keep your bookkeeping up to date, so in case of an audit and so on, but there's no time limit of spending. There's nothing related to a certain, like for 2020, no mentioning about that.
So then my understanding is the government wants the grants all taxed in the year received.
Okay.
I could be wrong by that. That's pretty specific. Like I said, the Siba Loan had the election you could file to defer the grant. So something of that nature might be available for this. I'll get your contact information from Dolores after and look into that.
Thanks.
That's great. Let's move on to a really good one. CEWS, or CEWS, the wage subsidies. What have we seen in that regard, Jeff, and also Kelly? If you have anything you want to throw in on that, by all means.
So the CEWS, the 75% wage subsidy, there's been 3 sets of rules that have come out, and some people haven't really kept up with those. So originally, when COVID first hit, the rules were you had to have a revenue decline of 30%, and then you got a 75% wage subsidy. Then people who had a 29% decline in revenue didn't apply for it or didn't qualify for it. So the government realized this wasn't fair, and in the fall changed it to, if your revenue is down at all, you will qualify for some portion of a wage subsidy. So after the first 4 months, some people didn't realize the rules changed, and they just would look at it and go, oh, my revenue is down 5%. I don't qualify, and they haven't applied for it. And if your revenue is down 5%, then you're good to qualify for all the fall months and even July and August. Now, the other rule that people missed often was if you qualify for 1 month, you would qualify for the subsequent month. So if you're analyzing your September revenue drop in October, you're going to take the greater of those 2 for your October claim. So some people might have experienced a revenue drop, say in September of 10%, and then October seeing their revenue go up 10%. So they wouldn't make the application in October thinking, well, my revenue's up, I don't qualify. But they can actually rely on their revenue from the previous month being down, and they would qualify for the wage subsidy for both months. So those are like the primary areas. We've seen people missing out on money. There's a deadline now, 6 months from the end of the claim period. So we'd be looking at September wage subsidy will be due at the end of this month. So people need to keep an eye on that. And what we've seen a lot of is the smaller businesses that they've been struggling the most, haven't wanted to pay for professional advice on this because they're the ones that are struggling. And then when you see their year-end information, you go, holy cow, you could have got all this money, but now those deadlines are closed, which is government policy perspective isn't really fair to them. The big companies obviously are all over this. So putting the deadlines in place is hurting the smaller companies, but it is what it is, and we have to live with it. So it's just a matter of making sure you're monitoring your revenue changes and making your applications for those. The website has a pretty good spreadsheet on it for calculating it on your own. You input your people's wages, you input your revenue decline for the 2 months, and it tells you how much you'll get back. So it's a pretty easy process, but it relies on you having wages from last year or revenue from last year. So it doesn't qualify for new businesses. And this ties into the rent subsidy, which a lot of people have missed too, because the original rent subsidy was the landlord had to apply for it with a whole bunch of information from the tenant and sign a new lease. And it was a big burden for people to do, and wasn't a great program. So now for the fall, starting in September, the government has come in and said, if you qualify for the wage subsidy, we'll give you the same percentage back on the rent subsidy. So when you talk rent subsidy, things like rent, property taxes, common area charges, building insurance, in certain cases, utilities qualify, and you get the same percentage back that you're getting on your wage subsidy. So the rules are in line for both of those programs, which makes it a lot easier. The rent subsidy also applies to building owners as well. So a lot of people see rent and they go, oh, I own, so it doesn't apply to me. But if you own your building, mortgage interest would count, property taxes, building insurance. So you might not get back quite as much money as if you rented, but you can get something back if your revenues are down.
Wow, that's awesome. Just the topics we've covered till now, out of the 2,000 members we have in South Niagara Chambers of Commerce, I think 1,000 of them should be on this call today. I suspect we have hundreds, that's probably not an exaggeration, hundreds of members that have not taken full advantage of just the ones we've talked about, let alone all the others.
Well,
Which
as
is a
I
shame.
said, Verne, as we're getting year ends in for people with November and December year ends right now at our firm, you're seeing people and saying, well, they haven't applied for anything.
Wow.
So now and there's been cases where they've lost out because the deadlines have passed on tens of thousands of dollars. So you're right, there are people that aren't keeping tabs on this.
Well, as in the case of rent and wage that keeps on moving up, it's going to be October next month, right? For the first time you can apply. Crazy. Let's move into personal just to move things around here a bit. Before we get into the grants per se, Kelly, on a just an overall general basis, what are you seeing as far as investments are concerned? Are people more cash flush now? Are they losing cash in today's turbulent stock market? Bond rates potentially going up and all this kind of stuff. What are you seeing people should be doing that's COVID related that is abnormal from your normal practice?
And actually, what's for 2020, and Desjardins economist, really wonderful guy, he did a great presentation of kind of going through his morning of going downstairs to his basement office and shared that, he'd go downstairs. There were a lot of opportunities in 2020 for many companies with the grants and as Jeff said, opportunities to diversify their industry, diversify their markets. And he was seeing what he said, this isn't a 2008 financial crisis, this is a transition economy, and there's a lot of opportunities. And at the end of the year, almost every index across the world was in a positive position for a year end, which he's again says, I'm sitting here astounded and excited and thrilled, and then I go upstairs to the dining room and there's my wife and I haven't taken her out for dinner in 9 months, and there's my kids sitting in the living room playing on the big screen, and I haven't taken them to soccer for a year. And he says that's the difficulty, and certainly in my office that's what I'm finding is that our personal lives and the exhaustion of overcoming work from home, the demands, because there's positive and negative, it's affected people's perception of their portfolios. And again, doing year-end reviews, and I'm telling people, your portfolios, it was the best year you've seen in 5 years, and they're all coming in surprised, thinking I was going to give them bad news. And they're saying, what? And it's this effect that certainly what you hear on TV about a key recovery, there's industry sectors that are going to suffer, but you know, anything to do with computer connectivity, there was an innovation fund this summer that from June until August had 150% growth rate just based on those companies that were providing. And these weren't dollar or penny stocks. These were solid companies that were able to produce this because of the sector and the opportunity that COVID has provided. So I'm seeing a lot of that, you know, and just to reiterate what Jeff had said, I know many times people are, I'm pushing them towards a CPA and they think I must be getting some kind of major referral fee, but the money that can be found by an expert like Jeff through these kind of tumultuous periods, it's invaluable. And what you shared, Verne, this is what Chamber of Commerce around Canada are all about. You say, I've been here for 15 years, but working in the financial industry, they had me moved around, and I always made sure I got involved with the Chamber of Commerce because it was business people helping each other. And in these times of trial, like I said, Jeff and I have known each other since I got here, I think 2005. And the number of times where I just needed to throw a couple ideas, and it's invaluable. These networks, these things are changing so fast, and something like today, hopefully people will listen to this to get some pointers, because Jeff's right. It's frustrating as a member of the community, seeing your neighbor not getting all the advantage he could have. And again, Jeff expressing that it's not fair, but we have to live with it. That's the kind of thing that all of us hope to help our neighbors out with, is that we're not leaving tens of thousands, because it'd be a shame next year or the year after watching somebody's business fail, knowing we could have got them 30,000 this year or 40,000. And I joke in my office that I'd rather $20 in my member's pocket than Ottawa's pocket. It's true. I don't build a portfolio so you can get taxed when you retire at 40%. I want to make you the money so that you're getting taxed at a lower rate later on. And those are the kind of things I need to talk about to our members in these crazy times. Jeff and I talk about RSPs, but there are some of my clients, unfortunately, they were in very high tax brackets, and 2020 wasn't a nice year for them, but it did give us an opportunity to divest RSPs for them at a tax bracket that we didn't even expect. We were just hoping to defer, but we had 5 members that I was able to say, you know, your projected income this year, we'll never see a lower tax bracket. When things start picking up again, you're going to be back up in the top bracket. Let's get out of these RSPs now.
Smart. Yeah, good move.
Those are things that when you're working with friends, with professionals like Jeff and the group at Chamber, that's where you make your money. That's where you save your money. So that's kind of my feel for this year, Verne, on the personal side. It's been taking the opportunities, and the market itself is, like I said, our economist has been so positive at the same time as sharing, yeah, I'm going home to watch the same Netflix tonight as I did last night, as I did I don't know what episode I'm going to have to start watching, but I think I'm going to start watching Teletubbies again, because it's getting that
Good point.
I don't have any kids left at home that'll watch that with me.
No, you know, Kelly, you make a really good point in that, you know, we have to fight a psychological mindset through COVID. We have to do a personal fight, and we have to help those around us. And you know, if we think back to what the Chamber's done over the last year, its biggest impact, it's been just that, to try to uplift people from a psychological mindset of Groundhog Day to get them to do things such as what we're talking about here, where, you know, Jeff watches money walk out the door. He's watching thousands of dollars float away in the sky because people have this frozen mindset, and it's so hard to get out of it, thinking that we're in worse shape than we are from an economic point of view. Okay, so it's really interesting to see what's happening. Jeff, can we talk about CERB and what's happening from a tax treatment standpoint for people getting that relief, and you know, recipients of tax documents, and how CERB is affecting our income tax on a personal basis?
Yep, absolutely. So there's a lot of articles out there for people who pay attention to it, but there's a lot of people who don't read the same stuff I read. CERB's taxable income to recipients. No income tax was deducted against it at the time it was given out. So if you got $10,000 of CERB, that gets added on top of your income from whatever employment or whatever else you got going on. So the lowest rate you could possibly pay on it, assuming you're taxable, would be 20.05%. There are cases where people are over the top tax bracket and still got to CERB because they couldn't work in March and April. A lot of realtors got shut down for a long time there. And then some of them still had great years because we know what's going on with the real estate market. So it would range your tax on that anywhere between 20% and 53.53% of that. So what the government's done to help the lower income people, actually really moderate income people, if you don't have the taxes aside and your income's less than $75,000 for the year, and you collected on one of the government COVID programs, then you can defer paying your tax without interest for an extra year. So you have till April 30th, 2022 to pay those taxes to help those people.
But you still have to file. You're still filing, obviously.
Absolutely, and you need to file on time.
Now, if you're not paying it, how do you notify the government that you're postponing your tax payment? Like, is there a checkbox somewhere that says, "Call me next year" or something like that?
There shouldn't be. It's, you know, computer driven. You got one of 7 different program income on your return. Your return's less than $75,000. The computer should know. Don't send out a payment reminder.
Cool. So you don't get a bill from the government reminding you to pay.
Well, you'll get your notice of assessment, but they won't tack interest on it. I don't know if the notice of assessment, I would assume it's not going to tell you that you qualify for this deferral payment. But if, you know, the government had some smart computer programmers, it would be in there. Really easy to do. But
cool. That's awesome. We have 6 minutes left. So if we want, why don't we do a Q&A? Jeff, is there anything, Kelly, in particular that you guys wanted to cover that we've missed because of timing? Is there any particular topic that you wanted to make sure we address?
There was only one more thing I wanted to touch on, because
Okay.
the CERB, the CERB program is done. Now the program is the CRB, and it's slightly different. It still equates to $2,000 a month that you can get if you're out of work due to COVID. You know, various other criteria you need to meet, but I think they're relatively pretty easy. But the biggest difference is if your income's over $75,000 and you collected CRB, you have to pay back 50% of it. So like I mentioned before, the CERB, some high income people got it because they were out of work. They won't have to have it clawed back. They'll just pay their tax on it. Where the CRB, the current benefit, the government said, well, that's, you know, it's great that you were out of work for a certain amount of time, but if you made more than 75,000, then you don't need to keep all this money. So you got to pay half of it back, and then you still pay tax on the other half. So that's
pretty reasonable, I would think.
And then the only thing I had to mention was, well, Kelly was talking there. I sent a quick message to one of our tax partners to ask Raul's questions about deferring that income there. And she's not aware of any other elections that can be filed. Without knowing the specific program that you got it in, generally just the Siba is the only one that, you know, is obviously allowed to be deferred with an election. So
cool. Great.
There are bad news, Raul.
Well, are there any other questions that, yeah, go ahead, Sharona.
I don't know, Jeff, maybe you have any information that can help me, but since December 1st, I've been intensively taking care of my husband due to a health crisis. So because his condition is expected to eventually get better. Finding that I'm not qualifying for any assistance whatsoever. But this is not completely COVID related. It is COVID related in the fact that he is very high risk. So I'm isolating myself. And he is an advanced age. We have a huge age difference. So he's close to 80. And I'm really worried about getting close to people. So just wondering, since you were talking about crazy year, I had a very crazy year, very crazy winter.
That's a good, so there's a Canada Recovery Sickness Benefit, but I think that only applies to the person who is sick. Although it does mention or a need to self-isolate due to COVID-19. So I mean, the argument there would be that he's high risk, so you have to self-isolate to be his caregiver. You know, EI has general sickness caregiver benefits as well. But
it's only if you're expected to die in 20-something weeks. He's not expected to die of this. Although if I didn't take care of him, then he might have. It was very serious. He would have lost his kidneys. He couldn't move. It's serious. I mean, he was just in the hospital 10 days ago for a few days. They fixed him up a bit and hopefully slowly he's recovering. But it's been a hell of a time. Yeah, I'm talking intensive care. He couldn't move. I had to bring everything to him.
there is one called the Canada Recovery. I'm not 100% familiar with all of these ones, but caregiving benefit.
Yeah, that was the one I'd seen earlier, Jeff.
Yeah,
I'm
so
trying to
I
look it
found
up.
out about that one. Yeah, but I couldn't apply for it because I've applied for the EI program and I was denied. So they didn't let me apply. So I'm waiting to see if they will cancel the EI and then I will apply for this. It was so intense that I actually didn't even have time to worry about this. I just went without any income and just into a hole.
Yeah, so I think that needs to be resolved first. The eligibility is that you're at home caring for someone else. But it does say that you cannot have applied for EI, CRB, CRSB in the same period. So I guess if you made that application, then you somehow need to find a way to withdraw that with Service Canada.
Okay. Okay, so Canada Recovery is the one then that I need. If I can't get that.
The Canada Recovery Caregiving Benefit, I think, is probably your best hope.
Yeah.
Okay. All right.
In that criteria says you're unable to work at least 50% of your scheduled work week because you're caring for a family member.
Mm-hmm. Yeah.
Kevin, did you have something to add to that?
Not to that. Yeah, I hope everything works out, Toronto. That's very difficult. Obviously, thoughts are with you on that. Jeff, one of the challenges, a lot of the companies I'm dealing with now, we worked all the way through if there's or there was reasons for us to be able to stay open. There's extra cost involved with PPE and the things like that. And we're finding that manufacturers and that don't qualify for the PPE grant because it's to deal with quote unquote the public, which we are dealing with when we deal with truck drivers and clients coming forward. Is there another grant that we're missing that we should be looking at instead of that one to help offset the cost of us trying to keep the doors open during the pandemic?
I don't think so, Kevin. Like there's so many of these programs that have come out.
Yeah.
But I don't know one off the top of my head for generic PPE grant. Is really just the Ontario one is the one that I see the most. And that's like the $1,000 for anyone with 2 to 20 employees or whatever the case may be.
Yeah, and it seems to disqualify manufacturers. It's
Right.
meant for service organizations. Yeah.
Yeah.
Okay,
right.
I just want to make sure we weren't missing something we could share with the rest of the people.
No, I don't think so.
All right, thanks, bud.
Thanks for nothing.
Once again,
always
you
worth
disappointed, Jeff.
Well, it's been
Well, if you don't have
challenging.
it, Jeff, then to find it's probably going to be a lot harder. So
Exactly.
good to know. Yeah. Great. Well, we've hit our we turn into pumpkins by another minute or so. So I'll close things off, and certainly thank everybody for participating. Hope it was worthwhile for you. And what was said so aptly by Kelly is that our chambers of commerce are here because every single member understands the importance of interdependence. Like nobody can run a company on their own. They need to find who is a good IT guy, who is the good person for tax advice, who is this, who is that. We're an organism that only survives because of all the other businesses around us, and that's what the chambers are for. And in situations like this, where big corporations with over 2,000 employees, they don't have a problem hiring someone of Jeff's caliber to make sure they're getting every cent possible that's coming out of these grants. Whereas if you're a small medium enterprise, you don't have time to even read it all, let alone try to apply for it. So we're at a loss, and hopefully belonging to a chamber helps that and allows us to get to things more quickly and to again take advantage of that interdependence. So anyways, I want to thank Kelly Maidens and Jeff Neill for their insight and help today. It's been great. Thank you guys, and thank you for your time. It certainly helped with understanding the situation. Our next Cheers and Chat session will be coming up. Watch out for the date at the What's Up Wednesdays notifications. And we're going to be talking about opportunities in this current low interest rate environment. So here we have a post-COVID recovery. We have, real estate prices going through the roof and still free money. And go talk to Kelly, he'll get you some free money.
Bank of Canada tells me they're not raising my rates for a couple of years. Yeah.
On top of that, we're almost even guaranteed that it's not going to happen right away. So thank you, Bank of Canada. But let's so this is going to be an interesting one. This could be one that we can say, well, that was pivotal for me becoming a millionaire. I really liked listening to that Cheers and Chat. So anyways, so that's coming up. And the other thing too is we have what started out the same way this one did with a mediocre audience, but has built up into a real force are these Friday podcasts. And they're Friday mornings at 9:30. We've had some kick butt topics, some really, really interesting topics. And they have not been a waste of my time. I don't think they'd be a waste of your time. They're pretty inspirational, and a great job has been done by Dolores and I forget the radio station, but is it 107.1? 104.1?
The river.
105.1, 101.1.
Okay, great. The river.
He had the point one.
I had the point one. I would have found him eventually. But yeah, so that's there, and if you can't make the 9:30, they're now podcasts, so they're on Spotify and iTunes, and they are good. So look at some of the past topics. This is number 9, I think, or something like that. So there's some pretty useful things to listen to there. So that's about it. And again, thanks to our sponsors, Desjardins and of course B4 Networks, Brian LaChapelle for helping us. Thank you for your contributions. They're appreciated. And that's it. Thanks, everyone.
Thank you.
Thank you very much.
Bye.
Awesome.
Bye.
Nice seeing everybody. Bye-bye.
Bye.
Thanks, Sharana. Good luck.